welcome to our channel. I'm Jackie Hurtis and I'm a residential mortgage lender.
I'm Shannon Carter, I'm a real estate agent and investor.
And I'm Sasha, Qualkenbush, a real estate attorney. And we're
the Property Queens.
Today we're going to be talking about real estate holding companies and real estate LLCs, how you start one and how you would purchase a property in one of those business entities.
Yes, so I have my little notebook and we're going to talk about it just because it's super detailed, but what people mainly use a holding company or an LLC for is the tax benefits and for the limited liability. So if, for example, you're an investor and you purchase a home and you are purchasing it specifically to rent it out to someone, if something were to happen and they were to sue you, they'd be suing the LLC and not you personally. So there is a lot more protection on that. So we'll just kind of go into the steps of setting up a basic LLC. And again, you definitely want to talk to an attorney. I'm not saying that you should do this on your own, but if you do this on your own, this kind of gives you a base for what you should do. So in Tennessee, you can go to the Business Services website and you can do a business information search. And once there, you can look up if anyone else has the name of the LLC that you want to start, because you don't obviously want to, and you can't open an LLC with the same name as another one. So that will be your first step. The second one will then be to file the actual articles of incorporation. So this is just a standard form. They'll ask you some questions on the website and you'll just answer them as you can. So for example, they'll ask you the number of members, they'll ask you how long you want the business to go. You'll want to choose perpetual, but just go through that process. They'll ask you who the registered agent is. You can either choose yourself, or if you do have an attorney that would like to be a registered agent or agrees to do that, you can put their name and information in there. And then once that's filed, you're gonna file for an EIN, which is an employer identification number, which is basically like a social security number for your business. And that is what you'll use later when you set up a business bank account. But the main thing that you'll need to do, and this is important in terms of getting a loan and then actually purchasing the house, is the operating agreement. So you're going to go through and make sure that you have the ownership and operation rules of how the company is going to be run. And you're just going to say, hey, if I want to make any decisions in this company, I can do it on my own. And that ties in with membership. So you have to also put in the operating agreement the membership interest, the membership rights and responsibilities. So each person, what they have to do in the company and business, what rights they have, if they can make any decisions, that's huge. Voting, management duties, how are the P&Ls handled? That's a really big one. How are the profits and losses handled? So if me and Shannon have a business together, am I going to take all the losses? Am I going to pay off all the debts on my own, or are we going to share them equally? Or if she owns 75% of the company, then I probably don't want to pay 50%. So we need to divvy it up as according to the equity share, or the rights of the business. So she'll get 75% and I'll get 25% of the losses, and we'll pay it that way. The same with the profits. We'll just want to do a pro rata share of exactly how much equity share we have. Termination or death, I think people leave that one out a lot. If one of us were to die, where would the business go? You can, obviously she might have a will, but if she doesn't have a will and then it gets probated, or it goes through intestacy, what's going to happen? So I'm going to make sure that in the actual operating agreement, I state that in terms of death, if something were to happen to one of us, then the rights or my share of equity would go to Shannon, or all of my rights in the business would go to my family. And then the last and most important one in terms of this video is the power to sign. So we want to make sure that there is an execution of document section in your operating agreement that says who can sign for the business. So when we're at the closing table, you know that you're allowed to sign for the business and encumber the business and its assets. So that is the operating agreement. I know it's a lot of information. You can find a ton of information on the internet, but just make sure, especially the power to sign, execution of documents is in that operating agreement. The next step would be to open a separate checking account for the business. You don't want to commingle your funds with your personal account. That is really, really bad because it pierces the corporate veil, and that sounds really weird to say, piercing the corporate veil, but it will absolutely get rid of all of your liability, or excuse me, your limited liability. So please make sure that you have a separate business checking account for the LLC.
Once you found the property and get it under contract, for the fix and flipped investors, they're going to look more so at what the ROI is going to be on rehabbing a property. So that's what's going to be more important to them, what they can kind of get from renovations and things of that nature. Then there's going to be another type of investor, that's the buy and hold. They're looking at more of the rental value. So they're going to be more concerned on what the rental market is in the area that they're looking at. Then also they're going to look at what the market trend is. So if it's in an area that they know is going to be up and coming in a couple of years, they're going to want to pick that area, because even though it's, you know, maybe cheap now, they know it has potential to build equity, and also they can make a good rental return on investment.
So once you are under contract, next step is securing the financing. If you're going to be purchasing in the name of an LLC, it's important that you find a lender who allows that. Most residential mortgage companies aren't going to allow you to close in an LLC, so you're probably going to be looking at a commercial or business loan. So the process is relatively the same. You're still going to fill out the mortgage application that you would purchasing as a residential mortgage, and then you're also going to send those same documents that we covered in a previous video, tax returns, pay stubs, all that kind of stuff. But you're also going to have to provide your lender a list of the current assets and liabilities. If you own other properties, they're going to want to know about that. If you've had a history of renting, that's going to show up on your tax returns. But then you're also going to want, if you're purchasing a rental, you're going to want to get that the current lease that's on the property and any rent rolls. You're also going to want to tell your lender some details about the property, what kind of property it is. It's HPR, condo, townhome, single family home, and then what your plans are for the property, whether you're going to be just purchasing it and flipping it and selling it again, or if you do plan to hold it as a rental, whether that's going to be short-term like Airbnb, or you're going to planning to do more of a long-term rental. Your lender is going to want to know all that information, and then they're going to go ahead and order an appraisal on the property. Those can run you anywhere from $400 to $750 depending on the property type and what you want to do with the property, because they can also do rent schedules for you if you were going to do something long-term. So those are just some of the basics. Just make sure that you get with a lender who can help you out if you are purchasing in the name of an LLC. That's the biggest piece.
Okay, and then at closing, obviously since you're going to be closing in an LLC, you're going to want to make sure to provide the title company with the documents that show exactly who owns the company and who is allowed to sign for the company. So that's why the operating agreement is very important. You want to make sure that in the operating agreement you state that you are allowed to sign, or if you want to give that power to someone else, you can also put that in the agreement. Otherwise, if you don't do that, don't worry. You can do a resolution, or most likely the title company will do one for you. But it's a resolution for execution of documents, or a resolution to sign for real estate. So they'll just draft something really quickly. You can find one online that gives that power to someone else. And so at closing, you'll actually sign your own name, not the LLC's name in the documents, and that's it. So that's the basic of exactly what you need to do to set up an LLC, and also how to purchase with an LLC.
Thank you for tuning in again this Tuesday. If you have any questions on what we have gone over in this video or any previous videos, make sure you hit the tab below and get our contact information and reach out to us. We would love to help you in any way we can. Make sure you hit that subscribe button and the notifications so you get an alert every Tuesday when we have a new video. And we will see you next Tuesday.
Bye. Thank you.
Bye.